Just before we start the session, a bit of company speak or shameless promotion and marketing. First of all, thank you very much to our sponsors, Visa, Freedom Holding, and ITS Group, which are a new multilateral trading facility at the Astana Financial Center, for helping us with this event. Also, we have a Telegram channel. I encourage you to subscribe to that. It's got live updates on the event as we go along. And just in terms of fire exit information, just be aware that, in the mini atrium between block C34 and C23, and in the zone after the elevators is, our area where we actually, in case, heaven forbid, a fire event, where we're going. My name is Isaac Berni. Welcome to this riveting panel on asset management in Kazakhstan and the Astana Financial Center. I have a stellar panel here today, as you can probably judge from our numbers, very, very popular topic from, an interest in the asset management industry in Kazakhstan. Before I start, I'll just quickly pass it on to, my panelists today to introduce themselves. Elaine.
Thank you very much, and good morning, everyone. Very happy to be here. My name is Alain Defiz, and I'm from Pictet Asset Management, based in London.
Good morning. I am Fahad Al-Thani from Qatar Financial Center, and I'm happy to be here today.
Good morning, everyone. Thank you, Ishak. Thank you all for being here. My name is Edward Kempson. I am a lawyer at a law firm, Latham Watkins. It's a global firm. I personally sit in our Dubai office.
Good morning, ladies and gentlemen. My name is Sudeep Biswas. I am from Tokyo Marine Asset Management. I'm based in Singapore, and delighted to be here among the esteemed audience and distinguished panelists.
Khairul Tan. Good morning, ladies and gentlemen. My name is Zamira Sundetova. I'm the head of Skybridge Invest, and I'm located here in Astana. Thank you.
Yeah, hi everyone. My name is Aslan Sultanov. I'm managing partner of Whitehill Capital. We manage Tumar Venture Fund, and we are located in Astana. Thank you.
So before I get going, I thought, very quickly tell you a bit about, Astana Financial Center. We got going about 5 years ago, operationally, going for about 3 years. We have an asset management regime which is benchmarked to many of the international financial centers. It has lots of facets, and some of the panelists today will also comment on that regime as well. We've had some recent amendments to those, so if you're interested, encourage you to go to our website and have a look at some of the recent amendments in respect of fund of funds, umbrella funds, the various types of entities that are allowed, in terms of REITs being allowed, about 10% under development assets that they can hold as well. So these amendments are very recent, fresh off the press, available on our website. Encourage you to go and see them. And if you have any questions about those issues, happy for you to come. So just a quick one. Being in a financial center that's only been operationally marketing an asset management proposition, and 2 years of that in the pandemic, how many asset managers would someone say that we have? 5, 10? Prior to this, for 11 years, I was at another Middle Eastern financial center. And I remember the uptake of the asset management industry from that jurisdiction. So just in terms of some quick numbers, we have 32 asset managers in the Astana Financial Center. About 27 funds that have been established, hedge funds being the most popular category in that. In terms of AUMs, despite the early days, about 585 billion currently, within our ecosystem, and we're really hoping that that goes. I was just doing a quick number in terms of looking at the AUMs that some of our panelists control, and it is about 20x of Kazakhstan's current asset management industry. So, needless to say, I think we have a very esteemed panel here today. So with that, I'll pass on to our first panelist today, Alain Defer. And Elaine, I'll ask you, what sort of emerging market investment interests do you have these days? What asset classes are you looking at? And any tips as to where you might be going in future? Because, Pictet does what Pictet does, and everyone sees what Pictet does and follow them. Over to you.
Thank you very much, and once again, good morning, and thank you for having me today. Just as a matter of introduction, we at Pictet are dedicated emerging market investors. We have been, our first emerging market fund was launched in 1998. At the moment, we have about $11 billion of assets under management, fully dedicated to emerging markets, managed by about 30 professionals. So that's the first thing. We're in for the long term, and we believe that emerging markets is a long-term game. Now, in terms of your question about where we are now, I'd like to start by saying that the attractiveness of emerging markets, and by the way, I've been active in the asset class for about 17 years, and at the beginning of my career, the attractiveness to emerging market was all related to growth and the growth differential. It was just about the number, right? It was about China growing at double-digit pace. And I have to say that today, the mindset has changed. What we believe is important is not only the growth, the number, but the sustainability of that growth. What do we mean by sustainability of the growth? So first of all, it has to be a growth that's inclusive, socially inclusive. And secondly, it has to be a growth that is sustainable from a debt financing point of view. It has to be prudently financed. Let me give you one illustration that I'm sure all of us have in mind when it doesn't go the right way. Let's talk about the Chinese real estate market. It was a growth that has lasted for many years, but we've discovered that it was not socially inclusive. Therefore, the government has had to backtrack. And secondly, it was not prudently financed. So that's the first point I'd like to make, is the sustainability of that growth, which is important. As far as Kazakhstan is concerned, we've been investing for a long time in the country, and as of today, we are investing in not only corporate debt, hard currency, sovereign debt, but also local debt. So it's a pretty much an area that we really like and really value. One of the elements that we believe is really in favor of Kazakhstan is the strength of the balance sheet. It's a very strong credit, and when we look at valuations for a BBB credit, looking at the broad environment of investment grade opportunities that we have, it's a very attractively valued market. Now, a few things that we'd like, as partners of an investor, we'd like potentially to consider as areas of development and improvement would be, for example, of the diversity of the sectors we have at our disposals. It would be really good at the moment, and also good for the economy, to be have access to non-oil and gas sectors, have a little bit more diversity there. I think that would be really, really welcomed. Of course, among the elements that are important for us, and you asked about the future, we always monitor, obviously, the predictability of our investments, rule of law, the fact that we want visibility, and we'd like also to have non-SOE, non-state-owned enterprises in our market and in our investment universe. So I think that is quite important to make sure that together with all the investments and the opportunities we have, that we work together to create that sustainability and that predictability. So that is key. For us, the future of emerging markets, of course, there are a few elements. I do believe that there's an element of emerging market now represent a little bit of a one-size-fits-all. We talk about this asset class as if it's a big amalgamate of similarly, similar investment opportunities. But we believe that the segmentation in the future is going to be very important. So we do believe that investing in some segments, the short data part of the curve, the investment grade part of the curve. So all that specialization is extremely important. But what's really, really close to our heart, and to my heart in particular, is to make sure that when we invest, as investors, we are really as agent of positive change as we can, as much as we can. And we talk a lot about a lot of acronyms nowadays in investing in general. We talk about SDG, ESG, and we do believe that in emerging markets, of course, environment is important. Of course, governance is important. But we believe that one element which matters the most is the closure of all the infrastructure gaps. And that is for us all the sectors like utilities, and all the sector insurance, financial inclusions, access to education. All these are sectors that we would like to support and to have more and more of a dedicated impact strategies in that domain. So really, and we are extremely enthusiastic about opportunities in this region. As we know, we are here for the long term, and the future is really bright for EM. The differential in growth is still in favor of EM, let's be clear on that. But we believe that there's much more to the proposition than this. It's about the quality of that growth, the inclusion, and the enhancement of all the social opportunities that EM has to offer. Because let's look at what EM means in terms of demographics today, but more importantly, what it means it will mean in terms of demographic tomorrow. By 2050, we just have to look at the numbers. That's where we put a lot of our attention. So thank you very much.
Thank you, Lane. Just one quick one. If debt is, a class of interest to yourselves, when you talk about Kazakhstan debt, do you see it mainly as Kazakhstan-focused exposure, or do you see Kazakhstan exposure as also perhaps extending to the broader Central Asian exposure?
Well, we look at both, really. We are exposed to the region, as we've mentioned. We have exposure to credit in Uzbekistan and all the neighboring countries, both on the sovereign side and the corporate side. So it's a real, for us, we are global emerging market investors, and each region has its level of attractiveness. And here, particularly, as we said, the strength of the balance sheets and the to be fair, for example, Uzbekistan can offer a bit of diversified sectors. You have automobile, automotive insurers, and that kind of
Do you see
private
room for synergies there?
Oh yes, definitely there are rooms for synergies, and I think there is space for us to manage more assets in those regions.
Thank you very much, Alain. We'll come back to this a bit later. My next speaker I'd like to for comment is Sheikh Fahad Jassim bin Al-Thani. Fahad is both an old friend and just this morning at the opening breakfast, the comment was made that AIFC can aspire to be a lot like some of the Middle Eastern experiences in building financial centers, like the Qatar Financial Center and the Dubai Financial Center and also the Abu Dhabi Global Markets. With that in mind, we thought, what better way than to ask Sheikh Fahad as to what strategies and what are some of the things that the Qatar Financial Center has done to build a blossoming industry where, Qatar asset managers, for example, manage the largest Sharia-compliant ETF in the world as well. So, Sheikh Fahad, any tips for us on how to go about this asset management industry build-up?
Qatar have built the ecosystem, and thank you, Isaac, you were part of it. So as a result of that, the companies under Qatar Financial Center are holding assets under management over $21 billion US, so which has a stable growth since 2020. So which are the can you hear me now? Oh, okay. So Qatar has built an ecosystem for for the asset management in Qatar Financial Center based on English common law. So as a result of that, so we have the total assets under management in Qatar Financial Center companies over 21 billion US dollar, which has stable growth since 2020. So on year-on-year basis, so the growth rate this year is 13%. So and yeah, that's.
And in terms of sorry, in terms of a broader encouragement for the asset management industry, what are some of the things, for example, in the upgrade for, I know Qatar got an upgrade to the MSCI index to emerging market, and one of the issues was that there was a lot of problems with fragmentation of liquidity. So what were some of the things that Qatar did to sort of address some of those issues?
Yeah, so as you know now, Qatar is went from frontier market to the emerging market, and so we have in Qatar we have a QE ETF is listed, and we have a Rayyan Islamic ETF also is listed there.
And does having that one market, help in collecting all the liquidity in the one stock market as opposed to multiple markets?
I believe yes, and now also Qatar is playing a role with the QIA to be a liquidity provider with a 1 billion initiative, 1 billion riyal, which is four times the daily trading market value.
And one of the things which is quite remarkable, I remember that some years back there was an Oliver Wyman study that looked at the total cost to transaction for, to go to market for a particular issuance. And, the results were quite startling, is that, they have despite being a very, high wage country, some of the lowest, costs of going to market. And I think a lot of that happens with a lot of the sovereign controlled entities all working together in a group, right? So can you give us some insight on, how's your relationship with your sovereign wealth fund, and, how they all come together to, go to the Qatar Stock Exchange, etc.?
Can you repeat the question?
So basically, how is the QFC's relationship with its sovereign wealth fund, QIA, and how do you all work together?
I believe we have a very good relationship with them, especially with the QIA and the QIA-owned entities. Most of them are the blue chip companies, financial institutions, insurance, industries, and they are also helping us to build the ecosystem and to attract foreign investors. So the result, so I believe we have a good result since last year. And last year, 2022, Qatar Stock Exchange, the index reached, I think, it reached the highest of its history, almost 15,000 points, which was a good result. And I spoke also with one of the speakers about the dividend yield. The dividend yield in Qatar Stock Exchange all market has average of 5%. So which is a good paying dividend on year-on-year basis. Now with the QIA, we made the initiative for the QIA to be the liquidity provider. So and also this one would help to stabilize the market and give confidence to the investors.
That's a very good yield for when the currency is pegged to the USD.
Yes.
So good exposure, I suppose.
Yeah, pegging the currency also is a challenge, for the money, for the inflow and the outflow. But and we have a few initiatives also, which one of them is to improve the capital market and listing debt products into the market. And we are talking with these companies to list sovereign bonds, which is issued by State of Qatar and some financial institutions.
Yeah, and so the SPVs for that will be in the financial center, and then
Yes, yes, yes. No, the SPV is we are doing good with the SPV. I think the first one was, I think the first transaction was executed for Qatar Commercial Bank.
Yes.
That was the first one, which is good, and we have a few in the pipeline.
Thank you so much. By the way, even on our stock market, we have an issuance from a QFC entity as well. Like, QIIB bond was issued here some years back. Thank you very much, Sheikh Fahad. With that, I'll pass on to Edward Kempson, a partner at Latham & Watkins. For those people who are new to Latham's, Latham's is one of the leading law firms of the world. Edward specializes in asset management and funds. And the questions that we have for you, Edward, is, having advised in multiple jurisdictions, Dubai, London, and having had a chance to look at our asset management regime as well, what do you say by way of comparisons, and perhaps also if you could comment a bit about where we should pitch at, whether we should be in the UCITS space, whether we should be sub-UCITS space in terms of how we appropriately structure our model for asset management. Edward.
Thank you, Ishaq. Good morning, everyone, again. By way of background, so I've spent many years in this jurisdiction and CIS more generally. I now sit in Dubai and do a lot of work with the Dubai International Finance Center. So my perspective I can give you is a comparison of different regulatory jurisdictions, different international financial centers, and particularly, of course, the differences in legal regimes that we see across particular jurisdictions. So Ishaq has already reminded you of the stellar growth in the AIFC asset management industry, even in the last year to 18 months. And there are many good reasons for that, some commercial, some legal, proximity to wealth centers, the nature of developed infrastructure, the AIFC court structure, and law that goes with it that provides that robust basis for investment and growth in the region. And then, of course, the general macro-political picture is always critical in the development of a successful asset management regime. So there are many important commercial underpinnings to the success that has been seen here and that we expect to continue going forward. But I'm going to talk a little bit about the legal regime, some of the measures that have been adopted only a few days ago, developing the local market here, and try to offer you some insight, analogy to particularly what we're seeing in DIFC, ADGM in Abu Dhabi, and indeed in other markets. One area that I think has proved critical in all markets has been the flexibility, the legal flexibility of fund structures. By way of illustration, we have in DIFC 3 different types of fund structure: a public fund, an exempt fund, and also a qualified investor fund. Qualified investor fund requires a higher level of minimum subscription, only offered in terms of private investment to professional investors, but has a commensurately lower standard of regulatory oversight, less enhanced disclosure requirements, and in many cases this has been an attractive feature pulling funds into the market, and we've seen in both DIFC and AGGM. Now, of course, in AIFC we have the exempt and we have the non-exempt fund structure. The QIF in DIFC takes it even a step further. Now, there is no right and no wrong in this. What I would say is that every time you reduce the level of regulatory oversight, yes, this can be beneficial for driving the market, but at the same time you need to ensure the same kind of robust checks and balances remain in your regime. So that's the first point for consideration, is just the flexibility of the variation of fund structures available, the level of regulatory oversight. Another area that has been, you've seen focus in the recent AIFC amendments is the availability of legal structuring behind the funds available in the jurisdiction. And in this respect, we've seen recently introduced the optionality to set up fund structures through the limited partnership mechanism. Of course, the limited partnership is a legal structure that has been used in just about every jurisdiction with significant effect. The benefit, of course, this is a tax look-through structure that also provides limited liability for its limited partners. So incredibly valuable, and therefore has become kind of the staple structure for many different types of funds, hedge funds, private equity funds. Now, this has now been brought to AIFC. We think this is tremendously important. We think this is a big step forward, and we look forward to seeing how this develops and supports the market. Another area, and again, I'll just give you an analogy with DIFC. Ishaq referred earlier to decision taken to permit REIT funds to have up to 10% of net asset value invested in development property. This is another important move forward in the market. By comparison, in DIFC, that figure is 30%. Again, there's no right, there's no wrong in this. At 30%, arguably, there is a decision taken to enhance and to protect, to seek to develop the local real estate market, allowing up to that 30% bracket. On the other side, of course, that increases potential exposure to that very same real estate market. So we think that 10% is a very important kind of step forward in the REIT space, we applaud the team for pulling that together in a thoughtful manner. Another area that we've seen being used to good effect to drive the market, to drive participation, is the extent to which application processes have been streamlined, both for fund asset managers and also for funds themselves. So what we've seen in DAFC and ADGM more recently is a concerted effort to rationalize fee structures, expedite timelines for approval and review processes, even to the extent of focusing on particular types of fund structures that they wish to incentivize into the region. And there has been success with this. Again, it is impossible to compare apples with oranges. Every jurisdiction has its own peculiarities, has its own regulatory framework. But as a general concept, the use of the fee structure, and particularly the use of the efficiency of the review and approval process, is something that we've seen really at the forefront of our fund management clients as they look to enter into new jurisdictions. And then finally, let me offer up one further kind of observation, something that we have seen in UAE, DIFC, ADGM, that has been, an important and interesting feature of the market, is the passporting regime. What this enables is for a DIFC approved fund to request and obtain a passporting approval to be offered into ADGM, into UAE onshore, without running through a separate regulatory license approval process in each individual jurisdiction. So you are approved in your home jurisdiction, apply for your passport license, and that automatically covers you then to be offered funds to be offered into other regions. This has been an important development at the AIFC. You see it in other markets in Europe, for example, and it's something that we've seen to be relatively successful. So, in summary, I mean, I think the steps, the amendments that have been made here in AIFC in the last few days represent really significant moves to continue to develop the local asset management regime here. and we look forward with interest to see how they play out in the market.
And just by the way, to thank Edward, their firm was one of the ones that actually, gave us public comments, particularly because they were just interested in it on our regime. So thank you very much. A bit of free advice from lawyers is always welcome.
Our pleasure.
With my next panelist, I'd like to pass on to Sudeep. Sudeep, if you could also, introduce Tokyo Marine to us. Do you run ships? And what are you doing on an asset management panel? And, perhaps you could give us an insight into your kind of AUMs and what emerging asset classes are you looking at, and how do you see the Central Asian region?
Okay, thank you, Ishak. Great to be here, and good morning, everyone. Tokyo Marine, as the name suggests, it's originated in general insurance, but the group now is part of Mitsubishi Group, and the history goes more than a century. The Tokyo Marine Group has presence in 38 countries now. So I'm sure some of you, when you took the travel insurance to come here, I think maybe it's part of it is underwritten by Tokyo Marine, if you read the fine prints. So in terms of businesses, insurance, both on the life insurance and general insurance, is a significant part of the business of Tokyo Marine Group. But we do have a significant presence in the asset management side, which is called Tokyo Marine Asset Management, and that is the part of the business I belong to. We manage about $75 billion across global markets, across asset classes, both on the fixed income side and the equities. I'm based in Singapore, and I invest in the Asia, Japan markets, and my specialization is on the public markets. Obviously, emerging markets is something which is very close to my heart, and it's good to see that we have more centers and more financial centers emerging, and I really appreciate the invitation here and being able to interact with people and investors in this region.
Sudeep, in terms of the geographies of some of the emerging markets that you're interested in, South Asia, India, Central Asia, what do you see specific about some of these jurisdictions, and what makes you interested in an emerging market?
Sure. So maybe just give a little bit of context to where we are currently. I think Alain earlier alluded to some of the points and why emerging markets in particular is looking quite attractive from both near-term factors and longer-term structural point of view. It's actually last decade hasn't been too kind for emerging markets, particularly in the public markets. And 2022 was quite tough because obviously US Federal Reserves, they increased the interest rates, and that led to strength in US dollar. And the strength in US dollar is never a good factor for investing in emerging markets. But in the near term, we see that that's probably changing. Probably the interest rate cycle is close to its peak. Obviously, emerging markets in Asia had its own challenges because China first went through the zero COVID policy, then it was eased, but the recovery has been a bit slower than expected. Also, the large part of the North Asia, which is dependent on the IT hardware and semiconductor cycle, that also hasn't been in the favor of the emerging markets. But we see a lot of it is changing, and both from the cyclical point of view, the outlook is definitely improving. On the other side, the Southeast Asia, the countries like India, Indonesia, those countries, those are more supported by domestic factor and longer-term structural factors. Demographics, which is in favor of these countries, and we must not ignore that almost 40% of world's population is in emerging Asia. And the demographics improving, the working age population is increasing, the middle class continues to grow, and that is leading to improvement in disposable income, higher consumption. So those are structural drivers that supporting the Southeast Asian countries. And at the same time, we have the cyclical factors, which is quite supportive for the North Asia. So that's basically is a key interest for us at this point.
So when I visit Singapore and come back, I get envious sometimes. To see the growth, development, that remarkable achievements that Singapore has achieved. So you've been there for a while, and when you compare some of the things that Singapore has done in terms of its growing its asset management industries, any tips for us?
Yeah, definitely. Means I'm myself a convert because my origin is in India. I moved to Singapore in 2008. Although it feels like a similar kind of situation now, but it was 15 years back. And I made Singapore as my home now. So definitely, Singapore has done remarkably well in terms of developing itself as a regional financial center. And obviously, it hasn't happened over 1 or 2 years. So it has been a multi-decade effort. And I think a lot of initiatives on multiple fronts. One is obviously in terms of having all the policy together and having all the directions in terms of the government support. I think initial years, what really supported Singapore to develop as an asset management hub was driven by the two entities which are linked to the state, GIC and Temasek being the two large state-owned asset managers. They invested a lot in the country. They supported a lot of global asset management companies to set up offices in Singapore and invest locally. That definitely helped in the initial years. Later part, whenever there has been opportunities in the region in terms of development in specific areas, there have been a lot of policy supports and policy initiatives. Just to give some examples, for like maybe 5 to 10 years back, when there was a greater interest in the private equity side and venture capital side, there was policy initiatives. Those were directed particularly for those sectors. Then most recently, in last 2 years, Singapore recognized that there is immense potential in terms of wealth management and private banking, and there is a immense potential in terms of developing the family offices, multi-family offices. In last 2 years, the policies have changed. There is altogether a new corporate structure that has been, it's called variable capital structure, that is quite conducive to set up family offices in Singapore. So last 2 years, we have been seeing an explosion in terms of number of family offices, the private banking industry, how it is growing in Singapore. So I think there is not easy answer, but it's basically nimble, being very efficient, tweaking policy as needed, and that I think helped Singapore to develop over the years. And maybe I'll just leave with one anecdote. If you look at Singapore time zone is actually 1 hour ahead of its geographic location. And that is because Singapore wanted to align to Eastern markets, like they wanted to align with Hong Kong, Shanghai, those markets. So that's why it went ahead and changed its time zone 1 year ahead, 1 hour ahead, and that's like a very interesting how nimble and dynamic it is.
I mean, that just shows the amount of commitment that, people are willing to give to the development of the industry in places like that. Quite interestingly, I mean, one of our biggest sponsors for the event chose us as their jurisdiction to come because of the time zone benefits that we provided to them as well. So that is also like, sort of applicable here. And the other thing I'm hearing, so I heard you mention Temasek, I heard Sheikh Fahad mention Qatar Investment Authority, that the sovereign institutions have a role to play or in the initial uptake of the industry to kickstart it, to be there for the asset management industry in terms of support, etc. And then, like, for the asset managers, like, the critical mass comes to even take it further from there.
Yeah, definitely. And just to add, even the regulator, which is Monetary Authority of Singapore, they also have a lot of initiatives and grants, particularly on new emerging areas like regulatory tech or fintech, particularly in the asset management side. If anyone is looking to invest in those areas in Singapore, the Monetary Authority of Singapore, they have a defined grant for such investments. The the exchange itself also plays a crucial role. The Singapore exchange, Singapore market itself is relatively smaller compared to the bigger peers like China and India. So what they have done quite well is they have developed the derivative markets, and that gives investors access to index level derivative contracts, and that acts quite well for the financial institutions and the asset managers who have their presence in Singapore.
By the way, Sudip and I didn't align on this point before the panel, but it is music to my ears because, yesterday we just are venturing into a commodity exchange framework, including derivatives. And we're hoping later this year we'll actually get our ISDA recognition as a closeout netting jurisdiction as well. So it's all clap clap as far as we're concerned on that one. Yeah. Thank you very much, Sudip. With that, I thought I'll take a slight turn and come to our Kazakh asset managers. With that, I first wanted to invite Zamira. Zamira is from Skybridge. Zamira, perhaps you could tell us a little bit about Skybridge. What your experience has been in Kazakhstan in terms of establishment, and what are you looking at in terms of your investment priorities?
Thank you, Isaac, for your question. Thanks for having me. It's my personal pleasure and honor to be here today and have a chance to talk about the benefits and opportunities that AIFC created for asset managers. Skybridge Invest is a leading investment company in Kazakhstan with over 2 decades of successful experience and successful asset management track record. My personal experience will amount this year 17 years, and I'm absolutely enthusiastic about the industry. I see the progress that Kazakhstan faces, especially enhanced by the AIFC. Skybridge Invest was the first company to launch investment fund in mainland jurisdiction of Kazakhstan in 2004 and within the AIFC in 2020. In 2018, we set up a branch here and obtained all license to carry out investment activities. And actually, we were drawn by many factors that has already been mentioned by Edward. But I list some of them why we have chosen the AIFC as attractive jurisdiction. Firstly, it's a common law as a legislative basis. Secondly, tax incentives. Third one is highly developed infrastructure and ecosystem of the AIFC jurisdiction. And the next one is flexible regulation of legal entities here in the AIFC. Let me describe everything in more detail, but I will try to be brief for the sake of time. Tax incentives is very positive and based on constitutional statute. On the AIFC, investors and business owners are exempt from corporate and individual tax income received from legal entities, from dividends and capital gain from legal entities established in the AIFC. Uh, Asset managers are also exempt from corporate income tax when receiving income from financial services. Quite appealing, and we are here pursuing this beneficial regime in taxation. The second one, AIFC has its own advanced, highly technologically developed infrastructure and ecosystem. We can use and submit application online to everybody of the AIFC, including exchange, which is operating on the NASDAQ-based platform, on to court, to International Arbitration Center, and we see that it really simplifies the process of operating in the AIFC. The next one is very flexible regime for establishing a corporate legal entities, and this is very useful for creation of investment funds and other wealth management vehicles here in the AIFC. When it comes to our experience, I would like to say that it was really difficult 5 years ago to be the first comers to this market, but we were supported by the AFSA at every stage of authorization process and registration process. There are actually two ways how to become an asset manager in the AIFC. The first one, if a company has already a similar license in equivalent jurisdiction, it can just apply to AFSA and receive recognition of its domestic license. The second path is to establish the business from scratch, and in this way the company should be able to meet all requirements set by AFSA in terms of eligibility, in terms of internal infrastructure, internal policies, and meet all prudential and capital requirements established for asset managers. There are two types of license, managing an investment and managing a collective investment scheme, and depending on the business purposes and depending on the nature of the funds to be managed, the capital requirement may vary from $50,000 to $500,000. So the process is not relatively simple, but it's transparent, it's straightforward, and we are more than happy to welcome you on board. Please join the Kazakhstan, please join the AIFC, join us. Thank you.
Thank you very much, Zamira. And Zamira, I just wanted to thank you also for being very proactive in terms of always giving us feedback and comments in terms of like how we can develop our legislation regimes. Certainly in 24 years as in regulation, I have not worked so closely with counterparts ever before. So that's one of the benefits of like an early stage financial center where you can really listen to your participants, and we hope that you also feel that we do listen and work with you in terms of like development of proposals, though it's not always for a regulator to accommodate everything, but we do as much as we can.
Thank you so much.
With that, I'd like to pass on to Aslan from White Hill Capital. Aslan, you are quite a unique proposition in terms of like the AIFC and your focus on investments and in what areas you operate. How has your experience been being at the AIFC, and how do you see your experience going further in terms of development of your organization?
Yeah, thank you very much. Yeah, definitely, I think we're quite unique within the AIFC because we as a White Hill, we manage a venture fund basically. I think, as you know, it's a very small and developing sector of finance. So basically, we did some research. As you know, there are not much of statistics on venture in Kazakhstan. So basically, we understood that for the last 4 years, there have been approximately 175 deals on the market. Most of them were not public, and overall, I think the total investment routed to venture is approximately, I would say, 160 million. But that's not much, of course. So we did have quite a good experience with AIFC, and I think we're a good example that basically it's all working. Just for giving you just an understanding, we applied for the license in, I believe, January last year. We received it in May. By November last year, we did our first closure, so our committed capital is 20 million. And in May, last week, basically, we did do the first I would say, routing of investment, we did finance 2 startups. So from applying for the license basically to disbursement of capital, it was like approximately not more than like 1 year and a little bit more. So we're I think a live example that the AIFC framework, AFSA framework is working. So I think still there are many things to be done actually in the industry. I think we can work on the different things in the area of taxation. As you know, like in venture business, we would have a lots of startups failing. So I think some incentives on taxation should be imposed. For example, when angel or venture firms would be compensated for that. Some maybe financial incentives should be done, like I don't know, new instruments for venture financing, infrastructure, and this kind of things. But overall, I would say, you know, I've been traveling a lot through the CIS countries, like for Baku, like Dushanbe, other things, and I would say that this unique framework that we have built give us a very good, I would say, competitive edge to attract investors from one side, and basically they invest into good projects which bring some, I would say, impact effect on the economy, etc. So we're quite happy to be there, and we welcome everyone to the market. So thank you.
Thank you very much, Aslan. Now, I haven't told the panelists about this, but I'm actually going to put a surprise question to them. It's a bit of a game. If you are to name one asset class and one emerging market that you're investing in the next 12 months, where would you go? And I'm going to start with Elaine, and Sheikh Fahad is not allowed to say that he's going to buy a new Bentley or a new private plane.
So to be clear, one asset class or one sector? What was the question precisely?
One asset class that you'll be investing in. You can't say debt and equity and this. You have to pick one asset class and one emerging market where you're going in the next 12 months.
Okay. I have to say emerging corporate debt. A bit biased.
USD or local currencies?
USD. And I would even be more precise by saying high yield for the next 12 months, because everybody says high grade now, high yield emerging corporates for the next 12 months. And one market, I would go with Colombia, because I do believe that Colombian assets are a little bit mispriced at the moment. They're very attractive. So I'd go Colombian corporate debt.
Yeah, well, let's hope you go into Colombia only for, the investment opportunities there.
Is it okay to mention Qatar?
Yes. We know you're biased.
I think I would invest in corporate debts. So in Qatari local market. So I want to endorse this product in Qatar Stock Exchange.
Edward?
So I won't plug my home regime. I would say certainly what we're seeing our clients do, a lot of liquidity moving east to East Asia, to Asia in general. And tech remains really at the forefront of a lot of folks' thoughts. Developments in AI, particularly, we just see exponential growth of interest in that. So that would be my view.
Yeah, Aslan would be very happy to hear that. Sudip?
Yeah. If I say anything other than public equities, my boss will be quite angry. So so in terms of asset class. So in terms of asset class, it will be public equities for me. And yeah, in terms of countries, I don't want to be biased, so I'll not mention India. So I will go with Indonesia. Indonesia public equities is something I would say I'll go with.
May I choose two things? I would say that private equity deals in India could be very attractive this year. And the second one is infrastructure in Kazakhstan in terms of maybe corporate bonds with high yields. Thank you.
Aslan?
In terms of our small venture, I would say Baku, Azerbaijan, and in terms of asset class, I would say stable coins and cryptocurrency. So that's our asset class.
With that, we come to the end of our panel session. The panelists are available if you wish to ask them any questions, if you want to walk up to them. I particularly want to thank my panelists because they're very busy people. They control a lot of money in this world. And they took time out to come to Kazakhstan and see us. We're ever grateful to you guys for that. Thank you so much.